All right, so get this. We're diving into Bitcoin today. Things are getting really interesting, and we're going to unpack some recent analysis from José Luis Cava. He's a prominent Bitcoin analyst, and he's seeing some serious shifts on the horizon that could mean some pretty big changes, even if you're not a crypto expert. Buckle up, because we're about to find out if Bitcoin is on the verge of going mainstream.
Yeah, that's the key question here, isn't it? Is Bitcoin finally about to break through and become a major player in the financial world? Kava's analysis suggests we might be at that tipping point, and some of the reasons why are pretty surprising.
Yeah, let's start with the unexpected. Donald Trump and Bitcoin. Trump signed an executive order focused on crypto, which is not something most people would have predicted.
It is surprising, yeah.
Yeah.
But the details are worth exploring. This executive order calls for the creation of a crypto council, which would essentially be a group of experts advising the government on how to regulate cryptocurrencies.
So bringing some order to the Wild West of crypto, that makes sense. What else is in this executive order?
Well, it also explores the idea of a U.S. strategic cryptocurrency reserve. Essentially, this means the U.S. government might start holding Bitcoin as a strategic asset, just like they hold gold reserves. And here's the potentially controversial part. The order also blocks the creation of centrally issued digital currencies, so pushing back against the idea of a government-controlled digital dollar.
Wow, a lot to unpack there. But Kava suggests there's something even more significant happening beneath the surface.
Exactly. Kaba argues that the potential creation of this strategic cryptocurrency reserve, coupled with the repeal of something called SEB 121, could be even bigger news than Trump's executive order.
Okay, now you have to explain SAB 121. What is it, and why does it matter so much for Bitcoin's future?
So SAB 121 has been a major roadblock for traditional financial institutions wanting to get into crypto. It basically treated cryptocurrency deposits as liabilities, creating a huge regulatory burden for banks. By repealing this rule, the floodgates could open, allowing major banks, investment funds, even insurance companies to jump into the crypto market.
So instead of being this fringe asset, Bitcoin could become a mainstream investment held by the biggest players in finance. That's a game changer.
It certainly has the potential to be. And think about the ripple effect. If the U.S. starts treating crypto as a strategic asset, other nations might follow suit. Imagine the G20, a group of the world's largest economies, all holding Bitcoin reserves.
That would send a strong signal to businesses and investors worldwide. Suddenly, every company would have to reconsider their treasury strategy.
Precisely. We could see companies of all sizes, not just pioneers like Tesla and MicroStrategy, adding Bitcoin to their balance sheets. And this wider acceptance could lead to more people using Bitcoin for everyday transactions, further blurring the lines between crypto and traditional finance.
Okay, it all sounds pretty exciting. But there's one thing that doesn't quite add up. Kaba points out that Bitcoin's price didn't immediately skyrocket after Trump's crypto-focused executive order. Why not?
That's a great question. And it gets to the heart of how the crypto market operates. Kava believes the market may have already priced in these potential changes. Remember, the world of crypto moves fast, and rumors of these developments were circulating well before the official announcement.
So the anticipation of these changes was already built into the price. That's fascinating. But where does that leave us now? What does Kava see happening next for Bitcoin's price?
That's where things get really interesting, because Kava's prediction isn't just about a steady rise in price. He anticipates one last upward push before a significant correction takes place.
So he's expecting the price to drop after this initial surge. What makes him think that?
This is where understanding Kava's reasoning is crucial. He believes this potential correction is a natural part of the market cycle and could be triggered by a number of factors, including profit-taking by early investors, or even just a general shift in market sentiment. However, he remains incredibly bullish on Bitcoin in the long term.
So it's not all doom and gloom. He still sees a great future for Bitcoin, even with this potential drop in price.
Absolutely. Kava's vision is one where, even after this correction, Bitcoin becomes fully integrated into the traditional financial system, ultimately reshaping the way we think about money and value. But the question remains, what does this mean for you, the listener? Is this potential correction a cause for concern or an opportunity? That's what we'll delve into next.
So we just explored some pretty major potential changes in the world of Bitcoin. And now the big question is, what does this all mean for someone who's thinking about investing, especially with this significant correction that Kava's predicting? Should you be jumping in now or holding back?
That's the dilemma a lot of people are facing right now. And it's important to remember that there's no one-size-fits-all answer when it comes to Bitcoin. The right move for you depends on a few things. You know your own financial goals, how much risk you're comfortable with, and whether you're in it for the short term or the long haul.
Okay, so let's say someone believes in the long-term potential of Bitcoin like Kava does. Would this predicted correction be a reason to stay away? Or could it actually be a good thing?
That's a really insightful question, and it highlights a key point. For long-term investors, short-term price fluctuations might not be as important as the overall trend. If you're convinced Bitcoin is on its way to becoming a major part of the financial system, a correction could be seen as a buying opportunity.
A chance to get in at a lower price before the next big upswing? I can see the appeal in that. But of course, there are risks to consider too, right?
Absolutely. There's no guarantee that Bitcoin will recover after a correction, or that the correction won't turn into a full-blown crash. It's still a relatively new asset class, and its price can be volatile. Plus, there's always the possibility of unforeseen events that could impact the market, whether it's regulatory changes or even broader economic shifts.
So it's not a risk-free bet by any means.
Yeah.
It sounds like we need to weigh the potential rewards against the very real possibility of losses. But what makes this so intriguing is the sheer scale of those potential rewards, right?
Exactly. We're not talking about small gains here. Imagine a world where Bitcoin is widely accepted as a form of payment, used for everyday transactions, and held as a store of value by individuals, corporations, and even governments. That's the kind of future that some Bitcoin enthusiasts are betting on. And if they're right, the gains could be astronomical.
Okay, I'm starting to understand the excitement around this, but let's play devil's advocate for a moment. What are the arguments against investing in Bitcoin? What are the reasons someone might choose to be cautious?
That's a crucial part of the conversation. Critics of Bitcoin often point to its volatility as a major concern. They argue that its price is driven by speculation rather than any underlying value, making it a bubble waiting to burst. There's also the concern about a lack of regulation and the potential for Bitcoin to be used for illicit activities.
So there are legitimate concerns about its stability, its security, and how it fits into the existing legal framework. It's not all sunshine and rainbows. It sounds like we're dealing with a lot of uncertainty, both in terms of the potential upsides and the potential downsides.
That's the reality of the situation, and that's why it's so important to do your research, understand the risks, and make informed choices that align with your own financial goals and risk tolerance. This isn't about blindly following the hype. It's about making calculated decisions based on a solid understanding of what you're getting into.
That makes a lot of sense. This deep dive is all about equipping our listeners with the knowledge they need to navigate this exciting but complex landscape. So we've got this intriguing prediction from Kava. A correction is coming, but he's still bullish in the long term. We've explored the potential rewards, the risks, and the arguments both for and against investing in Bitcoin. But I think the question that's on everyone's mind is still, what's the smart move right now?
You're absolutely right. That's the million-dollar question. And it's the one we're going to tackle head-on in the final part of our deep dive. We'll explore some potential strategies for navigating this uncertain terrain. And we'll leave you with some key questions to ponder as you make your own decisions about Bitcoin.
Welcome back to the final part of our Bitcoin deep dive. We've covered a lot of ground from the potential for mainstream adoption to the looming correction that Kava predicts. Now let's get to the heart of the matter. What are some smart strategies for navigating the world of Bitcoin, especially given all this uncertainty?
Yeah, that's the key question, isn't it? And it's one that requires careful consideration. Before we dive into specific strategies, I think it's crucial to reiterate that there's no magic formula, no guaranteed path to success with Bitcoin. The best approach for you will always depend on your individual circumstances, risk tolerance, and investment goals.
So no get-rich-quick schemes here. We're talking about informed decision-making, not just following the hype.
Exactly. This is about empowering you, the listener, to make choices that align with your own financial well-being. So with that in mind, let's explore some potential strategies. One approach that can help mitigate risk, especially in a volatile market like Bitcoin, is dollar cost averaging.
Okay, break that down for us. What exactly is dollar cost averaging, and how does it work in practice?
So instead of investing a large lump sum all at once, you spread your investment out over time. You invest a fixed amount at regular intervals, regardless of the current price. This helps to average out your purchase price over time, reducing the impact of market fluctuations.
So you're not trying to time the market perfectly or catch the exact bottom. It's more about consistent, disciplined investing over the long haul.
Yeah, that's the idea. It's a strategy often recommended for assets that are known to be volatile, and Bitcoin certainly fits that description. Another strategy that can be helpful especially if you're prone to emotional decision-making, is setting clear entry and exit points.
So having a plan in place before you even start investing, what does that look like?
We'll decide in advance at what price you're willing to buy Bitcoin and at what price you'd sell. This can help you avoid making impulsive decisions based on fear or greed. It's about having a strategy and sticking to it, regardless of short-term market swings.
That sounds like a good way to stay grounded and avoid getting caught up in the hype or panic at the moment.
It can be. Of course, there's always the option to simply observe from the sidelines. If you're not comfortable with the inherent risks associated with Bitcoin, there's absolutely nothing wrong with waiting to see how things unfold. You can always revisit your decision later as the market evolves.
So it's not an all or nothing proposition. You can dip your toes in, dive in head first, or just watch from the shore. The important thing is to make an informed choice that you feel good about.
Precisely. And remember, knowledge is your most valuable asset in this space. The more you understand about Bitcoin, the technology, the market dynamics, the potential risks and rewards, the better equipped you'll be to make decisions that align with your own financial goals.
This has been an incredibly insightful deep dive. We've explored so much, the possibility of mainstream adoption, the looming correction, and now the strategies for navigating this complex and ever-changing world of Bitcoin.
And what stands out to you as the most important takeaway from our exploration today?
For me, it's the realization that Bitcoin's future is still very much an open question. There's a lot of potential, a lot of excitement, but also a lot of uncertainty. It's a story that's still being written.
I couldn't agree more. And even if you choose not to invest in Bitcoin directly, it's crucial to understand its potential impact on the world around us. It's a development that could reshape the financial landscape as we know it.
So for our listeners who are still on the fence, still trying to figure out what to make of Bitcoin, what's the one question they should be asking themselves right now?
I think the most important question is this. What role do you believe decentralized digital currency will play in the future? If you believe it has the power to disrupt the traditional financial system, then Bitcoin might be worth exploring further. But if you're skeptical, there's no shame in waiting to see how things unfold. The key is to stay informed, stay curious, and make choices that feel right for you.
Food for thought, folks. We've reached the end of our deep dive into the world of Bitcoin. We hope you've gained valuable insights and feel empowered to navigate this exciting, ever-evolving space. Thanks for joining us on this journey.